Hi, I'm Samantha Fitzpatrick, co-manager of Murray International. The portfolio positioning hasn't changed greatly from the end of last year. We have roughly the same exposures in terms of geographies and sectors. There has only been one new stock position introduced into the trust in Q1, and that was Blackstone, the US company, which is the largest alternative asset manager in the world. And this one had been on our watch list for quite some time, but it became, in our view, quite an attractive entry point when the share price was really quite weak on the back of some broad market concerns around funding to software companies and some concerns around the world of private credit. The Blackstone is involved in these areas, but it does a whole host of things, and it's a very solid, well-managed business in our view. So when it's trading at a 5-year low, offering a dividend yield of 4%, that to us was attractive, particularly in a US context. And the only other change of note was one of the bond holdings matured in March of this year, so that Mexican bond is no longer in the portfolio. And apart from that, we have been trimming stocks which have held up extremely well. So we've taken some more money out of Samsung, TSMC and Singtel, for example. Some of the energy stocks we have trimmed slightly on the back of significant strength in these names, and we have recycled that into some weaker areas of the portfolio that we believe are still sound investments for the longer term. The Asian weight is still a significant part of the trust. It's fallen slightly. It's fallen from 23% to 21% over Q1 because we have taken some profits in names which have performed very well. Samsung, as I mentioned, had a phenomenal year last year, up 94% in sterling. It's up another 70% roughly year to date. So that was ripe for just some profit taking. And other names like Singtel and TSMC have been very strong. So just banking some profits in names has led to that overweight coming down a little bit. And in terms of Latin America, no change there. So we still have around 8% of the trust in LATAM. And it's just in 5 companies. So it's not, again, we're making a call on that market, but we like these businesses. We have 2 names in Brazil and 3 names in Mexico. So no change in that particular category. Happy with the stocks that we have in these markets. We have avoided the US mega cap names, not because we don't like these companies. Some of them are very impressive businesses, but because they are not a natural fit for this mandate. When you are trying to deliver a covered dividend, a running yield of between 4 and 4.5%, that becomes a real challenge if you're going to be investing heavily in names which offer zero income. So we have found some similar exposures in certain categories. We do have stocks that have benefited from the AI story, for example, but have also contributed to the income in a more meaningful way. So yes, there's no change in approach. The investment objective remains the same, and therefore our opinion in these companies, whether we can own them or not, whether it would make sense, is unchanged. So no holdings in some of these very significant heavy benchmark names. Some valuations are looking extremely high in certain parts of the market, and I guess that's always the case. Some, I think, of that is justified. When you look at some of the earnings growth coming out of some very big US tech companies, for example, you can see why they're trading at very lofty multiples. Now, we don't concern ourselves too much with that because they're not investable really in terms of the fit for this portfolio. But there is a read across to other names that we own. So we own BE Semiconductor, for example, in the trust, a Dutch business that is involved in the semiconductor industry. And that's our most expensive stock. It's currently on 40 times next year's earnings. Forecast to come down significantly if earnings come through as expected, but that's at the forefront of our mind. It's a small position, partly for that reason. And then other types of companies in the trust do tend to trade at the higher end of what we would consider to be a reasonable multiple. So names like Hong Kong Exchange, CME to derivatives operators, because of the consistency and the business models do tend to trade, the kind of high 20s multiples. So again, we're keeping an eye on some of these more expensive names. Thankfully, in the portfolio, it's offset by what you would argue are some really reasonable valuations in areas of healthcare, for example. Ping An Insurance, one stock we own, is on high single digit multiples. So we're able to have a balance, and they're running PE on the portfolio is around 15 times. So if you compare that to a standard global index, we're still looking pretty decent value in that sense. There is no shortage of things just now to be keeping an eye on. In fact, your head could be spinning at times trying to keep in touch and keep on top of all the news flow. So obviously geopolitical concerns are at the forefront of most investors' minds. And the knock-on effect then to what that means at the moment for things like energy prices, inflation, the knock-on effect to interest rates is all something that is sensible to monitor, but to be quite honest, nobody has the answers to these things. So from our perspective, what we focus on is fact over speculation. And if it's fact you're dealing with, how does that impact on the 50 companies that we are invested in? That's what we can control up to a point. And that's what I think investors should be focusing on as well when it comes to overall investments or portfolios. So are these vehicles doing what you would expect them to do? Are your holdings as well diversified as you think they are? So absolutely look under and see what the biggest holdings are in the various products that you manage so that you're not taken aback when perhaps what has been very strong performance in certain names could turn around at some point. So I think for all the uncertainty out there, the main message I would give is to absolutely keep an eye on big picture events, but just make sure you're very well diversified for a range of outcomes. Thank you for watching. For any other information on Murray International, please visit our website.